What's up, everyone? It looks like we're entering this summer doldrums type of trading environment where right now we're at least consolidating and there's little volume, meaning not a lot of action going on, and more likely a lot of participants, market participants, big players are sitting and waiting for the next big move. So in stock indices today, we've probed the lows, then in the European session, then we probed the highs in the US session when Chairman Powell was testifying in front of Congress. And since he didn't say anything controversial, it looks like markets kind of liked it and they were rallying, but then basically closed flat on the day after actually showing some bullish momentum in the middle of the day. With Bitcoin, it's an interesting story as well, since over the weekend we saw the fireworks below 20,000. Then now we rallied back up to 21 and a half, where I told our inner circle traders that watch out, I think this is going to be toppish and it's going to go back retest the 20,000 level. But in my previous video, I was again talking about exactly the same thing, where at 17,000 I also said watch out, since this is the weekend, it's going to go back up. So basically this is a ranging environment, and so for now a lot of capital is not being committed to either direction. When you don't have a clear-cut direction, you're better off following big money, and if big money is on the sidelines waiting for direction to be revealed, this is what you should be doing as well, instead of getting into trades. And then basically what happens is you see the market is starting to run, and then it reverses, does a reverse, it runs the stops, then reverses again. So this is when your stops are getting hit all the time, this is the time to realize that this is not a trending environment. We're switching towards the ranging environment, and your trading style has to be adjusted accordingly. More likely than not, probably you should pull off the amount of capital being deployed and trade in a more nimble way, where you take profits quicker. Don't overstay your welcome in your trades. In any case, let's take a look at what we're looking at in the stock indices: Bitcoin, gold, and US dollar. Let's dive in. Let's take a look at what's happening with the stock indices. So S&P 500, as you can see, we've been after a pretty powerful sell-off. For the last week, we've been probably putting in some kind of temporary low, as discussed in previous videos. And it's characterized by this choppiness that you can see when you trade, when you see this range pretty much. So we are capped on as you can see. I thought we're going to go a little higher today. We were long. We made some decent money trading Nasdaq and S&P. I'm still in S&P. I thought we're going to at least get to these highs, but this is the range pretty much, and that's exactly what we're doing. It's a little annoying to trade, but basically choppiness, indecision is the characteristic of such markets. So don't commit too much capital, trade nimbly, tread carefully, and right now let's see what if we have a bullish follow through tomorrow. That will be a good sign. That means that the temporary bottom will be we can expect maybe at least this trend line here, the top of the channel, to be retested. Let's take a look at the daily where it's more clear. So basically, if this is a temporary bottom, and we need to take out these highs, and maybe towards the end of the week and next week as well, we can retest the channel top. However, all that's said and done, you can also see that this was the previous order block bottom. So let's go here. This was the previous support from which we have produced that rally last 2 weeks ago, or 3 weeks ago. Then we sold off. So now we're retesting the bottom of this previous support, now turn resistance. As you can see, sellers came in, sellers came in here. Today we started the day on the we took out the lows of the previous day candle, then we took out the highs of the previous day candle, and we've finished slightly bullish, flat pretty much for the day. Not bullish. This is a bearish candle, so pretty much flat for the day. And tomorrow is going to be quite a telling day, because if we're going to start breaking down today's lows, I think we might head lower, and if we have a bullish follow through, maybe we'll have a little bit of a relief rally. And why should you care about all this stocking this stuff? Well, because a lot of other instruments will trade based on what's going on right now in the U.S. environment. So if you're trading Bitcoin, US dollar, etc., you should be watching this and at least understand what the hell is going on. Let's drop some fibs. So, right. So, let's see. I'm just gonna enable the main ones. So as you can see, 618 right here comes in on top, pretty close to the top of the channel. So at least the bare minimum, I think tomorrow, if we get a bullish follow through, we should see this 38.2 fib, basically take out the highs of this swing, run stops maybe, and after that we can roll over or continue upwards. But that's what I'm expecting, a little more upside with S&P 500. Nasdaq is looking similar, just consolidating after being after the sell-off. It's now trying to it's also in a range. If you look at the 4-hour chart, we're trying to sell off, we're trying to rally, we try to sell off, then we rally, then we close in the middle, indecision, and usually that's because the markets were a little bit oversold, and you can see these conditions being characterized by the divergences. So like I pointed out last time we had the bullish divergence, meaning, as you can see, this low here, and this low is higher than this low, but the low here is the opposite, right? So this low is lower, this lower is higher, which is the opposite right here. That's a bullish divergence. That's telling us that the momentum is waning. So, and then we had this rally. Right now, though, it looks like we are trying to overwork the oversold conditions, and momentum is waning, but we're not getting much of a rally, at least not the one, not unlike we've got one here. As you can see, we had a very nice bullish candle, followed by even more bullish, aggressive buying, etc., right? This was a pretty steep, pretty fast rise, and this is very, very anemic. So I'm thinking maybe we're repeating something like this. We're just gonna do sideways, maybe pop to the top, and then roll over again. So this is not something you should be buying with a lot of capital. So use small amounts of capital to deploy, basically catch this counter trend rally, and then once we start selling off again, you position yourself correctly after we have a little bit of a pullback. So that's Nasdaq and S&P. So let's take a look at the gold. Is doing the same thing. It's pretty much just stuck in between 1880 and 1800. So this is the 1800 bottom right here, and this is 1880's top, and we've been sideways for over a month already. So nothing interesting going on with gold. And this is what I posted when we were here. That buy, make, cross, blah blah, buy, price formation, etc. So when this blue candle wasn't here, this was early. Well, I can probably show you. Let's go profile. Right, yeah. So this is the post, the original post. As you can see, nothing was here. This was spot on prediction. So right now, if we're closing above this resistance, maybe we'll have another run up. If we used Fibonacci to find the bottom, and this is the Fibonacci target. So this is something I teach in the course that I offer to our students at apexbull.com. So if you're interested why this happened the way it happened, more than welcome to check out the course online. In any case, so this actually came out to be pretty on point. And if we start getting tomorrow, we're starting to get a little bit of a follow through. You can hop on that if you're not along already. You can hop on that action and target the range highs with that coincide with the Fibonacci sequence as well. So you have a confluence that you can use as a target, and that's gold. So, and lastly, let's take a look-see at Bitcoin. So on Bitcoin, I was basically saying the same thing. I'll actually pull this up. To our, when we were somewhere here, I basically said, watch out. Well, this wasn't like that. And I basically said, watch out, I think we're going to start rolling over. We did roll over to retest the 20,000. And now it's still trying to find the direction, I think. Obviously, if stocks rally and this is a temporary bottom with the divergences and all, we're in for a sideways consolidation like this. Or if we get lucky, we might get a break. So this is an inverted head and shoulders, obviously. And we might get a rally, retest this previous order block here, previous range, coinciding with the channel. With this, oops, that's the wrong one. So coinciding with the channel top. So you have, again, a confluence of resistance, big resistance. Let's drop some fibs. Let's see, this was the end of the sequence. So at a bare minimum, as I posted previously, maybe we'll retest the highs of these swings around 38.2, which is at 24,000. Maybe that's in the cards. If we get lucky, we might get a little deeper pullback all the way up to here. Retest the lows of this range at 618. That would be, but then you have to look for sells around this. If you start seeing Bitcoin starting roll over at the channel resistance, you better hop on that trade, because it's probably going to be a quick, fast move down. But for now, again, same thing as stock indices. We're just ranging and trying to find, trying to see what's going to happen next. Sometimes you're in this limbo mode, and you shouldn't. You should just stay on the sidelines and let the price reveal itself before you hop on that momentum, whichever way the momentum goes, up or down, bullish or bearish. So let's see. We can actually measure the head and shoulder. Let's see. So yeah, and this is targeting pretty much 618. So if it plays out to the full, which it rarely does, I would bet that I would target first at 23 and maybe 25,000 as a halfway point, so to speak. You usually don't want to leave it the order all the way here, because I don't think it has enough juice to do that. But this is a price inefficiency, and usually price inefficiencies get closed. It's like a gap before the trend resumes. So in any case, to summarize it all, we are in the sideways chop fest. Market participants are trying to ascertain what's the next big move. And once you're gonna start seeing momentum and volume coming in, you'll see large candles developing, and that's the momentum you should hop on. As of now, you can see that this is just small, indecisive, low volume type of price action, where you should stay on the sidelines and observe it until the real move reveals itself. As always, if you like the content, please like, subscribe, leave a comment. We appreciate it, and it helps the algos distribute this information to other people who might find it helpful. So we appreciate it all. More than welcome to step by our free Telegram group. Link is in the description page, and check out apexbull.com. Hope it helps. Enjoy.